Imagine you've been renting in Burnaby. You've saved your down payment, you're finally pre-approved, and you're expecting competition to heat up. But when you check the MLS, prices are slipping, listings are climbing, and no one's rushing in. The benchmark condo in Metro Vancouver now sits at $728,000, down 4.4% year over year and 0.8% just since August. There are 17,000 homes for sale, one of the highest levels in nearly a decade. Yet condo sales are up only 1.5% from last September. Across the Lower Mainland, it's the same story. Benchmark condos around 675,000, roughly 4.5% lower than last year. Cheaper money, more supply, and softer prices. This should be a buyer's dream. So why isn't the market taking off? That's the story of fall 2025, a market cooling in numbers but warming in opportunity. So let's dive into why it's happening. Reason number one, there is too much choice. September brought 6,527 new listings, about 20% above the 10-year average. And when buyers know they can shop around, urgency disappears. That adds up to roughly 7 months of inventory. In plain English, if no new listings hit the market, it would take 7 months to sell what is currently for sale. Anything over 6 months leans towards a buyer's market, and we are right there. In areas like Mount Pleasant and Brentwood, agents say listings are sitting 60 to 80 days before selling once price adjusted a few points. That's what balance looks like. Reason number two, sellers are still anchored to 2022. Many remember the frenzy. They price high, wait, and then reduce. Across Vancouver East, condo values are about 4% lower than last year, but many asking prices haven't caught up. That stretches negotiation timelines and keeps days on markets rising. Reason number three, confidence takes longer to heal than interest rates. Yes, the Bank of Canada has cut rates multiple times this year, and another move is likely. But after 3 years of volatility, buyers want proof the slide has stopped, not just promises. Across the Fraser Valley, condo prices are also down about 4.5%, and sales are flat, steady, but cautious. And we've seen this before. Back in 2019, inventory looked just like this, and the market plateaued for about 6 months before a modest rebound. What's the difference now? Household debt is far higher, so the slowdown is driven more by psychology than affordability. So, what it means for you. This is the first truly balanced stretch we've seen in years. The sales to active listing ratios sit at about 13.3%, right on the buyer's market line. Agents in New Westminster and Burnaby are saying accepted offers are landing a few percentage points below listing price, often with subjects back on the table, something we haven't seen since 2020. Almost half of September's condo sales closed under 750,000, and about 30% were between 750,000 and 1 million. That shows where inventory is holding. The entry and mid-range segments, not the luxury tier. So the key takeaway for buyers, you have time. You have leverage, use it to review strat documents, negotiate closing costs, and lock in a really good rate. But there are some hidden risks. Most rate holds still expire after 120 days, so don't wait too long. If rates begin to shift again, your approval could too. Now, for sellers, price ahead of the curve, not behind it. The first 10 days on market still determines your outcome. Homes priced realistically are selling, overpriced ones are just aging online. With 17,000 active listings, presentation matters. Stage, photograph, stand out. Now, for investors, this is a fundamentals only market. Rental demand is tight. Vacancy rates were 0.9% in 2020, 1.3% in 2024, and now they're looking at around 2% in 2025. But when we look at appreciation, it's muted. So focus on cash flow, not speculation. And remember, BC's flipping tax treats gains within 12 months as income. So make sure you talk to a professional first before selling fast. Emotionally, the market feels less fearful and much more fatigued. Buyers are cautious, not panicked. Sellers are pragmatic, not desperate. And the standoff, like this standoff between buyers and sellers, defines fall 2025. So what happens next? Prices continue to edge down, about 0.8% month over month. It's a gentle slide, not a crash like you might see in the news. If the Bank of Canada cuts rates again this winter, They are saying activity could rise within 3 to 5% into 2026. If inflation stays a little sticky, expect this balance phase to last a lot longer, maybe until next summer, summer 2026. But historically, markets like this last about 6 to 9 months before shifting. So, what is a signal to watch whether listings start shrinking by spring? So, it might look like the market's frozen, but it's actually recalibrating. The speculation premium is totally gone, logic is back. So, for consumers, that is super healthy. There's going to be way fewer bidding wars, way more transparency, and space to make smart decisions. If you're buying, use this window to learn the market. And if you're selling, lead with price, not with hope. If you're investing, see 2025 as a reset year, that bridge between correction and recovery. So, prices are easing, choice is expanding, rates are trending lower. This is Vancouver's breathing space. So, I'm Wolvie. This was your September 2025 Metro Vancouver condo market update. Be sure to follow for October's numbers and a closer look at which neighborhoods might turn fast. See you on the next video. Peace.